Brilliant. Well, thank you so much for all being here today, and really excited to be discussing this panel on a topic which I don't know about anybody else here, but my Twitter feed is entirely dominated by the questions whether ChatGPT-4 is the future of AGI and whether we need to be concerned about superintelligences eating us in the next few years. But just to focus on the financial sector side of things, at a time like this, obviously we're seeing some really fascinating discussions about fintech, and I think we'll be hearing more about that in a session tomorrow, about the potential good uses for fintech and the ways in which it can open up financial inclusion and more rapidly and readily access markets to people who have been traditionally excluded. Although on the flip side, there is the real questions around issues of bias and systemic flaws, which could lead to major problems for those same groups and further exploitation around issues of data. So I'm delighted to be joined by some excellent panelists today. We have Anna Fellander, who is one of Sweden's leading experts on digitization, and she's the CEO and founder of Ank.ai, which works with companies around assessing the ethical risks of their AI systems. And Nikita Agarwal, who's a postdoctoral fellow and a lecturer at UCLA, where her areas of focus include consumer law, international economic law, and financial regulation, and she's previously worked at the IMF as well. So, Nikita, if we could start with you, given all the buzz and focus on AI, both the positive and negative around financial services, I'd be really interested to get your thoughts around some of your current research, which is looking at the idea that algorithms such as AI and machine learning are not ethically neutral. I think there's an idea often that tools or digital tools are much like any other tool. They just exist and they don't have a motive purpose. But I'd be really interested to get your thoughts on some of the major problems in financial services posed by these systems.
Yeah, thank you. So I think there's a sort of threshold question that we need to address before we can have any meaningful conversation about the ethics of AI or the ethics of machine learning. And that's really the question of, what is the measuring rod, right? Or rods. What are the values that we are concerned about? What is our normative framework? And so is it about some notion of efficiency? Is it about some notion of fairness? And if it's fairness, is it some kind of procedural fairness, some kind of distributional fairness? Are we concerned about certain rights like privacy and what do we mean by that? And more often than not, we're balancing many of these objectives, right? So we need to be cognizant of the need to navigate conflicts between them. They're not always going to be aligned. So that all being said, my own lens is particularly focused on questions of distribution and specifically understood as poverty and inequality of income and wealth. And so through that lens specifically, I'm concerned about the potential regressive effects of more machine learning driven decision making, for example, in credit markets, to the extent that it could result in increased price discrimination, less affordable borrowing by lower income, higher risk groups, and the inverse for higher income, lower risk groups, which could have regressive effects. And these regressive outcomes could sort of travel through multiple channels, and it could be due to, for example, the fact that you have more personalized products, you have more personalized pricing, it becomes harder for consumers to comparison shop. In these digital environments, it's much easier to sort of consumer, so to speak, and prevent them from searching and switching. And so you essentially, even if you have a market with many sellers, you have no real effective competition. And these kinds of effects are exacerbated when you have these very large companies like Google and Apple that are taking up more space. From another perspective, there's also, to sort of offer another angle on this, we have major kind of push, or we've seen a lot of developments in sort of pre-trained models, right? So sort of off the shelf, or like these machine learning libraries. We have to ask ourselves, who's training these models? Who's labeling the data? And is this being done in low rights jurisdictions where there are no protections for workers or very limited ones? And so sort of, what people refer to as ethics dumping. And so these are just a few sort of concerns from a largely inequality-focused perspective. But as I say, where I started, how we evaluate the ethical risks of machine learning in financial services really depends on what framework you want to apply to begin with.
Brilliant. Thank you, Nikita. And Anna, just from your perspective, working with companies who are looking at ethical risks in their AI systems, what are the kind of areas that you see emerging in the financial sector? And how does that affect the business of firms? I'm just thinking sort of parallels maybe to cybersecurity, which maybe 30 years ago was not really considered a focus in any way for firms, but now is obviously core.
Right. So first of all, I'm glad you mentioned in the beginning that AI is actually should be embraced by financial actors due to staying relevant, but also increased efficiency. But 85% of all AI projects are leading to misguided results due to bias in data, algorithms, and the teams responsible for managing them. And this poses costly, unintended, and ungoverned risks such as privacy intrusion, discrimination, lost autonomy. We have a human right for autonomous decisions, misdisinformation, you mentioned ChatGPT, and social exclusion. And in the financial sector, we see AI being implemented without an ethical lens on, for example, credit scoring, leading to discrimination. We've seen females with the exact same financial situation being rejected credit, whilst a male being accepted due to historical bias. And also in the insurance industry, risk prediction. I mean, this is also the question of how much data is decided that I want to share, and how much data I'm in a conscious and autonomous way choosing to be shared by these actors, and also how this can discriminate low-income areas and people. And then we have AI for recommendations and upselling, nudging. So there's like a tipping point where it's a good tailored service, and then it's not so good because the consumer, the financial customer is getting into manipulation and maybe over-consuming credit, for example. And also we mentioned ChatGPT. So the question is, why does this happen? Because all of this is happening unintentionally. So first of all, there's algorithms are working on historical data, norms, and also there's no go-to-market readiness threshold. There's no way of saying this is a sufficient data set, this is trained, and it's validated. And also, there is the bias of the creator. So Nikita, you also mentioned that the coder, first of all, the coder, he or she, needs to translate the ethical principle of a bank into code. And how do you do that without training? And also, how does this scale in a broader ethical and social context? And if I, as a coder, of course, wants to maximize engagement, profits, and sales, how do I let ethical guardrails get in between? And can I actually make those decisions by myself? So now to your questions, critical business decisions are taken in tech silos without aligning them or translating them to regulation, nor the context where the solution or service is used in. So we talk about cashless societies. I hope Sweden will be the first, but there will be cashierless stores. And in these cashierless stores, everything is opting or optimizing towards customer efficiency. Like, I want to be smooth, I don't want my devices. But when is it so efficient that I lose my autonomy and I don't know if it's debit or credit? So we need to demystify the tech silos and also put the ethical questions on the top of the agenda, make the consideration between fairness and precision, between tailored services and privacy intrusion, and between the maximizing engagement sales towards your organizations or financial institutions' ethical principles principles. And this is human rights, actually, that are being violated.
Brilliant. You remind me, actually, my a friend who I won't name, but who's also an AI ethicist, refused to go into I think it was Amazon Go store on the grounds that they didn't want their data taken, and it felt so. I think it is coming, those concerns. But what you're saying does lead on sort of neatly to the kind of follow-up, which is sort of the ways to mitigate some of these risks. Mm-hmm. I think you've touched on sort of that nature of the silo being quite a problem in terms of AI being developed by small teams and not necessarily having the business side or the legal expertise at the off. And I was just curious, from your perspective, other ways to kind of mitigate these concerns and, I suppose, how are firms deriving value from protecting or ensuring that ethical AI systems are put into place?
Right, so you need to detect early, because it's costly to have AI investment being withdrawn. And it's also, this is not the time to fail fast. I'm not going to say who said that, but because if you fail fast, you will have massive reputational risks. And trust is key, right, in the financial sector. And also the upcoming regulation, the AI Act and the AI Liability Directive will pose financial sector sanctions. It's up to 6%. But anyway, so how we work with organizations is to work on the 4 requirements for responsible and ethical AI. It's explainability, and that's not explainability in the tech silo way of governing that, because if you use a product like Lime, an explainability model for AI, the result of that cannot be understood or translated into discrimination law, for example. So, and then there's transparency and there's accountability. You mentioned cybersecurity. This is exactly the same. This dark cloud of fear that cybersecurity was 20 years ago. Same with ethical AI, but now we see that organizations are appointing chief ethical compliance officers. But the most important thing is governance. How you dismantle the tech silo and you have cross-functions governance between the tech silo, the compliance and legal teams, and the business team. And so being where the solution is used, having the end customers harm in a risk assessment, impact assessment way of measuring it, that's what the AI Act is all about. So the AI Act could be seen like a triangle, and the upper, which is prohibited, is going to be sanctioned by 6%. But the financial industry is in the high-risk AI. And all high-risk AI needs to be, or there needs to be a human in the loop in all AI development stages. You need heavily reporting on explainability for non-tech decision makers, on accountability, and also the impact assessment. So what's important here, and the gap, is how do you take AI governance and marry that with ISO risk management standards, that is for the AI Act. And that's what I do with companies. I marry these two so they can understand each other. So the tech team can report to non-tech stakeholders and to regulatory bodies.
And Nikita, sort of following up on the AI Act point, I'd be interested to get your thoughts both on sort of the balance between kind of where public regulatory action is needed and private market initiatives can sort of fill that gap, but also actually just on the governance point. I know in the past we've had, just more generally in tech companies, bringing in AI ethics panels, and which have had limited or mixed results, to put it politely. And I'd be interested just as well on that front, sort of where you see that emerging, and in terms of chief ethical officers, whether that's going to be treated as sort of, I'm sure some companies will treat it probably as window dressing, but obviously if you've got the AI Act and concerns about fines, how financial services companies will sort of need to engage with that more readily.
Sure. Yeah, so on the question of the balance between the public and the private, of course, this is the enduring question. And if I had the answer, I would retire tomorrow. I think there's no doubt that there's a role for government and regulation to play, to the extent that unrestrained markets are not going to achieve the goals, particularly these sort of non-efficiency goals, if you want to call them that, that we are trying to achieve, or at least not in a timescale that matters. So government does have a role to play. Public regulation has got a role to play. And I think, there's many things you can do at the level of the technology, but a lot of it is really just the sort of traditional prudential and consumer protection regulations that haven't really been designed specifically with technology in mind, but ultimately what we're concerned with is the outcomes of the technology, right? And in many ways and this is sort of the principle that cuts across many different sectors, it's not that prudent to regulate the technology itself just because there's a risk of obsolescence and so on. And so, for example, when I talked about credit markets, we need to have robust ability to pay or affordability testing, which are more developed in some countries than in others. Of course, there's a role for market solutions. I think open banking, to the extent that it is partly market-driven, is useful. I think it's useful to empower consumers to manage their own data, but I do think there are real limits to that as a mechanism, limits to private ordering for various reasons that consumers will not be able to self-manage their personal data and the outcomes due to their personal data. And so we do need to have public frameworks in place. And so relatedly, the ethics panels you talked about, and yes, there's been a trend in recent years to put in place ethics advisory boards or ethics advisory committees, appoint chief ethics officers. Call me cynical, but I don't know that the incentives are that well aligned for firms, at least those with profit maximizing motives, to do this for reasons that are not aligned with that motive. I think Apple's move to do things like do not ask app not to track, and this sort of thing is more of a pretext than anything else. I don't think that it's really serving privacy per se as so much as the ability to control more consumers in their ecosystem. So it potentially is anti-competitive rather than harmful to consumer welfare rather than supportive. The other thing I wanted to say is that, so yes, there's a role for government, and we are all sort of conversant in financial regulation, financial policy, but it doesn't stop with financial policy. There's also a limit to what financial policy or even monetary policy can do. There's an important need for investment in skills and in labor laws that will protect workers and ensure that workers can share commensurately in the returns to innovation, right? So there's a lot that financial policy can do and monetary policy can do, but there's also other areas of policy, public policy, that are as essential.
And before I open up, Anna, do you have anything else to add? So I saw you scribbling notes. So
I have so much to say, but you're the guide here. So.
Well, yeah. Well, I mean, before I open up, yeah.
Well, first, I think what Margrethe Vestager said when she announced the proposal on the AI Act is that EU citizens we're not going to be competing with EU citizens human rights being violated. So it's actually it's an awakening by this act what is actually being when we look into the black box that is now becoming a glass box in glass organizations, because that's the new thing. Like an ESG governance form is transparency, and this is the S and the G. I truly believe that even though there are critics saying that this law will hamper innovation, productivity, and disproportionately hamper the growth of SMEs, I think we should ask ourselves, what's the alternative? Because that would be a distrust to institutions and society using ungoverned AI. And then I also wanted to discuss the actually going beyond compliance and making it your competitive edge. So US companies, they have standards, they don't go with regulation, but then they need to comply with EU regulations when they're active here. So this regulation will in fact awaken citizens, and I believe it's not the responsibility of the clients or the citizens to have they're put in an asymmetric relationship here, because you can't grasp how, when I opt in to different, I give my consent in different data sources, I cannot know how AI can create insights that is privacy intrusive for me. So the technology is so complicated at the moment that the consumer or the citizen can't have the responsibility of actually interpreting it. So organizations should be, and I truly believe that regulation is the right way to go about it.
Ian, thank you. On that note, can I open it to the floor if there are any questions at the audience? Somebody have quite a few questions from the audience.
Thank you very much. Jeff Goodell, University College London. So we know that the tech world is not some force of nature. The tech world is us. We can decide what we want it to be. And here we see a problem that is not mainly about what the AI algorithms are doing per se, but about the data to which the algorithms have access. This is particularly important in the context of payments, because engaging with the economy, which has become the digital economy, is an intrinsic feature of modern life. This came up earlier in the context of privacy and anonymity. Now, acknowledging that people cannot verify what data is not being used to do, and that they cannot trust what they cannot verify, then is the business opportunity intrinsic to data analysis incompatible with the ability for individuals to avoid sharing more than they want to share when they conduct financial transactions?
For me, okay. So I think we need to distinguish different meanings of privacy, and I think embedded in your question are various notions of privacy. So is privacy just obfuscation, so that we just do not use information, and the fact that someone's information is being used or someone's being watched is an intrusion on their privacy, right? Another interpretation, another meaning of privacy could be that the individual has the ability to control what happens to their privacy. So it's not about obfuscation in this sort of classical idea of a private sphere, but more that you get to shape what happens with your identity, your information. Or is it actually something more than that? So we're not talking about these ideas, sort of what would be considered more sort of maybe rights-based notions of privacy, but a more kind of consequential idea that it's not so much even that the individual needs to control their data or protect their data, but we just need to mitigate any harms due to the use of that data. In that case, the duty really falls on the data processors and the data controllers to use the data in the best interests of the individual. And so I think, whether we think that this the machine learning and basically a data-driven financial system is incompatible with privacy really depends on which of those notions of privacy you conform to.
Anna, you?
So data bias, I want to underline, because there's no black box algorithm or AI solutions that will be on the market when we have the AI Act. So I just want to underline the biggie of the AI Act. So you will have to report. There will be a human in the loop in all stages of AI development. You will have to report what data says. You would have a customer saying, hey, I have the experience of being harmed. I'm being discriminated. Please explain what data, the algorithm, what was the data set that decided what decisions the algorithm should take the decision on. So I'm just saying that times are over when we can work with deep learning in the way that there was no explainability, no interpretability, and no accountability. So that's why I want to just talk about the AI Act, how this will just shake the environment and the awareness of the customers, but also how organizations needs to demystify the tech silo and do the impact assessment together with the coders. And that also leads us to what kinds of skill sets do we need in the tech team. And the more AI we implement, the more we need the female energy I'm not saying that female are more intuitive, but there's an empathy and there's a social skill set. So it could, and that is like it's being polarized. The more we implement AI, and the left side of brain can rest, and we can activate the right side brain, which needs a more female. And you talked about education and how to get more diverse tech teams. So that would be a natural effect on this.
Thank you. Front.
Thank you. Simon Gleeson from Clifford Chance. In order to regulate something, you first have to define it. And the biggest failure of the draft AI proposal is its complete inability to define what is meant by the term AI.
Yeah.
Now, if you've ever renewed your car insurance online, you have had the experience of entering into a contract with a computer involving no human being. Is that AI?
Yeah.
And if not, how do we define
Yeah.
AI? What is it you're trying to
Yeah.
regulate?
Yeah, so the critics on the AI Act has been on how vast AI is defined. So it's from rule-based applications, which is, if this happens, do that. I mean, that's super easy statistical models, right? All the way to deep learning, which means that all organizations need to answer the question, do I have AI? And if I do, is this high-risk AI? I mean, if it's prohibited, but every organization needs to say, okay, do I have high-risk AI? And if I have low-risk AI or medium, that's like a chatbot. The zone between the high-risk AI that needs massively reporting and a new governance system, and between the medium to low risk, like a chatbot, that is, it's great, but it can also be that a chatbot, you've heard the chatbot that became a racist. So this is, all organizations needs to detect, where do I have rule-based applications, and report.
Do you want anything further to add?
I mean, I think, Simon, that's a very good point, of course. It's not defined, essentially, right? It's just everything, computing, we don't really know. It speaks a little bit to the need for technical expertise in government and those who are involved in drafting these things. Yeah, I mean, I think it also forces us to sort of think a bit more critically about the conversation around ethics of AI. And if I can suggest that there is a strong political economy dimension to the EU's, I wouldn't say that they're rushing, but they are slightly trying to race ahead to regulate AI, and there's a sort of strategic goal to be the first to regulate this and to potentially capture a market. It's possible that in the haste to regulate, or in the race to regulate AI, we're sort of rushing over some essential key parts. Yeah.
I love this panel because we're not aligned. This is exactly how a panel should be.
Excellent. I think we're... No.
No, but
No, sorry. No, it is nice not to have... I was going to make some AI alignment joke, and then it just missed me. So apologies to everyone watching. I was going to say, we're just about to come up to time, and I want to just kind of to wrap up and say thank you both, and say it's been a fascinating panel, and I think for me, certainly the points which both the speakers made up brought up on the definitional aspect really is something which, having not been in tech journalism for a while proper, is something I would go back to and spend the next day looking through the AI Act in detail. So huge thanks to Nikita and Anna and to the BIS for this event. Thank you.